The IRS is coming after Kraken users, claiming that they did not pay their crypto taxes. But if you yourself do not use Kraken, the information in this video is still extremely relevant. So please pay attention, because what you'll learn in this video will hopefully protect you from any future trouble. Welcome aboard the Bitcoin Express. My name is Chase. Let's get to it. The IRS has filed a John Doe summons asking Kraken to provide account details for all American taxpayers who have held at least $20,000 in crypto on the exchange from 2016 to 2020. And this is a John Doe summons, meaning that there is no specific taxpayer in mind. The IRS believes that many people didn't pay their crypto taxes and they want their information. And what's very concerning about this story is that a very similar thing already happened in the past. Circle and Poloniex were forced to give up user information. It's not something they wanted to do. Circle fought back, but in the end of the day, they wanted to remain compliant and they were forced to give over information for the same reason. The IRS believes people did not pay their taxes. And when it comes to Kraken, they're going all the way back to 2016. And this is something I think many people forget about the IRS. It's not like if you got by in 2019 or 2020, they forgot about you. They go back many years later, and they did this with Coinbase. And like I said, if it happened in the past, it can happen again. In 2016, a US court approved a John Doe summons on Coinbase. And of course, Coinbase did not want to give this over. And this is something we have to remember. Coinbase, Kraken, they do not want to give your information over. But in the end of the day, if they want to remain compliant, sometimes they are forced to. So what happened? Eventually, Coinbase ultimately agreed to turn over customer records from a group of approximately 13,000 customers in 2018. And what's very concerning about this was it went so far back in time. They were able, the IRS, to get information from Coinbase users from 2013 to 2015. So people were getting letters in summer of 2019 about things that they did in 2013. And often online, we'll see these gurus on Instagram and YouTube saying, don't pay your taxes, taxation is theft. And while I tend to agree more towards that side of taxation is theft, I also remember that when you live in a land, you follow those rules. It's that simple. Because if in the future you do get in trouble, the IRS comes after you, I promise you one thing. All of these people online telling you to not pay your taxes, they will not be coming to help you. You are all on your own. If you want to pay less taxes or you want to pay no taxes the right way without going to jail, there are ways you can do it. Number one, you can establish residency in Puerto Rico. Number two, you can renounce your US citizenship and move to a land that will treat you better. And number three, you can create a crypto Roth IRA. And that brings me to iTrust, who is today's video sponsor. iTrust Capital is a crypto retirement account, one that I personally use myself. And they provide a crypto Roth IRA. And with a crypto Roth IRA, your crypto gains are tax-free as long as you hold it until after the age 59 and a half. And they have a wide selection of cryptocurrencies. They have Bitcoin, Ethereum, Polkadot, Litecoin, Chainlink, Bitcoin Cash, Stellar, EOS, XRP, which is currently on hold due to the lawsuit, and Cardano coming soon. In addition, they also have gold and silver. And what I like about a Roth IRA, remember, not just a regular IRA, but a Roth IRA, is that you can take out the initial investment tax-free. Not something that a person would want to do because then there's less crypto or less money to grow, but also in the event of a true emergency, right? Let's say you really need the money in certain cases such as medical emergencies, the profits in a Roth IRA can be taken out tax-free. And this is just for a Roth IRA in general, nothing specific to a crypto Roth IRA. So if you wanted to check out iTrust Capital and get started, I do have a link down below where you'll get your first month free. So definitely would recommend to go ahead and check it out. So if you're not willing to go through with any of those three methods, moving to Puerto Rico, crypto Roth IRA, renouncing citizenship, and you're living in the United States, unfortunately, even if we think taxation is theft, you will have to pay. Because like I said, if many years later they come after you, no one is going to help you. And what we saw is that the IRS sent out more than 10,000 letters to Coinbase users. And remember, this went all the way back to 2013. So people are receiving letters in the summer of 2019 for things that they did all the way back in 2013. And the way that you fix this, let's say you are a person who has some gains from 2015 or 2016, is you file an amended tax return. This is something that your accountant can help you with. I would like to think that if someone in the past made $100 or $200, maybe the IRS won't come after them. Not something that I can guarantee, but if you did make gains in the past, 20, 30, 40,000, maybe in 2016, 2017, 2018, but you did not pay the IRS, if the IRS ever finds out, I am pretty sure, and I think you will agree, the IRS will come after you. So remember, if you didn't do it in the past, amended tax return, and if you're starting out brand new, right, you just got into crypto, then you're in luck. You already know going in how to avoid this trouble. Because remember, the joke they say, two things in life that are certain, death and taxes. And as much as we think it's a joke, it's actually true. Remember, you're living here in the United States, you follow the rules. You're living somewhere else, you follow the rules. You don't like it, pick up, there are options, go ahead and move away. And on this channel, if you get in trouble, I'm not going to come and help you, and neither is anyone else out there. But what I do on this channel, what I will do and continue to do, is teach you guys ways on how you can legally pay less taxes and in some cases no taxes. And one of the ways you can do that is the way that you account for your crypto. When it comes to crypto accounting, there's more than one way. There's actually three ways. There is first in, first out, last in, first out, and highest in, first out. And if you want to learn more about these methods and how it can save you more money in crypto taxes, make sure to click the link right above. Go ahead and watch that video. Like this video, subscribe to the channel. Thank you for listening, and I'll see you next time.